Everyone, and welcome to today's call. Answer these questions to sell more impaired risk disability insurance. I'm your host, Seth Groff, VP of Sales at Risk Insurance and Reinsurance. And I wanted to do something a little different for today's call. If you are on this training, I'm assuming you are a believer in disability insurance. You probably even might consider yourself an expert. But a common problem that I hear in the DI industry is that a lot of agents that are out in the field struggle when it comes to presenting disability insurance. And they really struggle when they have a client that was declined and they have to go back and present an impaired risk product. And so if you are struggling with impaired risk disability insurance, or you know another insurance professional that is struggling with impaired risk disability insurance, a good exercise is to take a step back, look at your presentation, see what's working, what's not working, but really take a look at the client. Try to look at the client and really understand what problems they have that you can solve, and also what are they thinking during the presentation. And obviously, learning that comes through experience and just presenting to the clients. But today I'm going to share some ideas that you can implement to help a client reach a buying decision when you're presenting impaired risk DEI. So today the focus is going to be on the client. And so to kick this off, I want to have a little trivia session. What sales guru said it's not what you like, it's the consumer? If you have any thoughts on who said it's not what you like, it's the consumer, go ahead and type it into the chat feature, and we'll see if anyone can get that. So I'll give it a few more seconds here. And if you don't know who said it's not what you like, it's the consumer, you might be surprised. It was actually Joe Dirt from the famous movie Joe Dirt, which is one of my favorite movies. And this quote came when Joe Dirt came across this fireworks stand in the middle of the desert. And if you've never seen Joe Dirt, you know what this scene was that at this fireworks stand, all they had was snakes and sparklers. And Joe goes through, a whole list of different types of fireworks like snicker bombs, finger blasters, spleen splitters, things like that, cherry bombs, and asking, where's the good stuff? And, Chicken Wing there, all he said is that, he sells what he likes, which is the snakes and sparklers. And that's when Joe Dirt came back and said, it's not what you like, it's the consumer. And I think, the disability insurance industry is guilty of this a lot of times. We're so focused on what we like when it comes to a product or a company. We don't look at what the actual consumer likes or is looking for. And so I always like to use this sales analogy. I think it's one of the greatest sales scenes in movie and cinema history, but just always remember it's about what the consumer wants, not what you like. And Joe Dirt reinforced it in this scene. So today's call, what we're going to fight. Well, first of all, I want to share one more story. This is an empty chair, and I picked this up from an article about Jeff Bezos, the owner of Amazon. And the article said that Jeff Bezos, in every meeting and, in the boardroom, etc., there's always an empty chair. And that empty chair represents the consumer, the client, right? And, what he challenges his employees and the other people in that meeting, when they're having strategic discussions about where the company should go, he always, reinforces that empty chair is represents the client, and to think about what they're thinking, and make sure your decisions on how to proceed includes them. So again, just want to reinforce that today we are focused on the actual consumer, and questions that are going through their mind that need to be answered. And so today what we're going to be going through is we're going to be going through an excerpt from the book The Science of Selling by David Hoffeld. I've read a couple of his books. I've actually went to one of David's sales trainings as well. There's some good stuff in his books that you can actually apply to what you're doing in your business, which, we're obviously going to go through part of that today. Two things that I like that David talks about. One is heuristics, which we're not going to talk about today. But the other thing that I like and what we are going to talk about today are the 6 whys. And what David claims is that in order for an individual to reach a purchasing decision, the 6 whys have to be answered. And there's a couple ways to get to the answers to these questions. Sometimes the client will show up to the meeting already having answered some of these questions. A good example of that is I always use the auto industry, right? And if somebody's going to go buy a car, you don't have to sell them on why your industry solution, right? They know that a car is going to be better option getting to work than riding a horse, right? That's just an example of a client coming to the sales meeting already have answered one of the 6 whys. Also, you can, communicate the answers to these 6 whys through good questioning, right? I'm a firm believer in asking the client good questions. And if they can answer their own questions themselves, it's just easier through the sales process than you trying to answer all the questions that they have. So if you can get them to answer the questions in their mind, themselves, it's just going to really help solidify the sale. And then obviously part of your presentation can be communicating these answers to the questions. So just to be clear, these aren't questions you're going to directly ask the client. It's questions that you need to communicate the answers to the client for them to reach a purchasing decision. And, one of the things that you have to realize is that, you'll need to spend more time in some of these questions more than others. Sometimes there will be overlap. So an answer to one of the questions might, be the same for the other. But, don't get too caught up with it. Just know that, in order for that client to make a purchasing decision, you have to make sure you hit on all 6 of these points. And the great thing is, obviously, we're going to talk about how to answer these questions in the impaired risk disability cell, but it really can be used in any sales situation, right? Even if you're just, convince a stubborn kid that they need to eat their lima beans, if they're saying no, you haven't sold them on the 6 whys. Is why they should. So that just kind of gives you an idea of the scope of this. So what are the 6 whys? So number one, why change, right? They're already doing something. Why should they change what they're currently doing? Why now, right? Why does today make sense? Why your industry solution? Why you and your company? Why your product or service? And then finally, why spend money? Now, again, you don't have to answer all these questions for the client in order. You don't have to spend the same amount of time on each one, but if you haven't communicated something in each of these questions, that's probably where you're going to get an objection. So most of you can fall back into one of these questions and you didn't answer it for the client, whether you asked them a question and properly answer, or you just communicated it through your sales presentation, all your objections are going to come back and fall into this. So I'm going to create a scenario and then I'm going to go through and answer all 6 of these questions on how you and then this is what you would want to communicate to the actual client. So here's the scenario. We have a 37-year-old male. He has a wife and 2 children. He owns his own marketing firm, earning $200,000 a year. He was diagnosed with type 1 diabetes a couple of years ago. He is on insulin, but he's stable and he hasn't had any adverse health issues. The agent submitted an application to a domestic carrier, and they were declined due to the diabetes. And the agent followed up, got some impaired risk quotes, and all he did was email them to the client. Right? He said, "Hey, unfortunately, you're declined, but I can get you this." So now the client's a little bit hesitant to move forward, right? Because the agent didn't follow up, set another meeting, just shot them some quotes. And so now he's kind of hesitant, second guessing, do I really need disability insurance? And what's this graded plan? And so this is a scenario, it's a scenario on a daily basis, coaching agents on how to, overcome the dreaded decline from a traditional carrier, but we could get them coverage with Flex DI. And so this is going to kind of walk through that sales process. So just remember the scenario we're doing today: declined with the domestic carrier, has a pretty significant health issue, and we're going to try to get him coverage with Flex DI and walk him through the sales process. So first question, why change, right? This question is obviously reestablishing the need for disability insurance. Hopefully the agent already knows how to do this, because he already got him to say yes at one point in time when he took the original application. But reinforce that it's Joe's most valuable asset, his income. Reinforce the fact that the family relies on his income for their current lifestyle, and then reinforce the fact that between age 37 and 65, there is a lot of money that's going to pass through his bank account, right? And and I went out and Googled, like, I can't remember what I Googled, financial earnings projections or something, but Key Point Credit Union had a great calculator that allowed you to put on his income, assume, a 4% or whatever percent increase in income every year, and then it did all the math for you. So I just went and Googled that, found it in like 5 seconds, did a screenshot out of it. I have no affiliation with Key Point Credit Union. It's just the calculator was on their website. But you can see that that's a lot of money, right? So the 10,393,000, it might be worth, taking steps to protect a portion of that potential income, especially since you have diabetes. So when it comes to, why change, it just boils down to establishing the need for disability insurance. And I always tell agents, you need to do that every time you meet with the client. Every time you communicate with the client, you have to do that. It might not be the same amount that you did the very first meeting, but it never hurts just to remind them why they need disability insurance, right? Protect their most valuable income, because their family relies on their income for their current lifestyle, and a lot of money is going to pass through their hands between now and when they retire. So let's protect against a risk of something happening that would prevent that money from flowing into their bank account, right? So that's going to be the why change. So the next question is going to be why now, right? He's made it all the way to 37 without disability insurance. He's even had type 1 diabetes for 2 years. So why now, right? And the reality is, I don't know if he will become disabled or when, but here's what I do know, right? His health, there's only three things that can happen to his health. He can either get better, his health can stay the same, or it gets worse, right? Hopefully it doesn't get worse, but if it does, then we better have this policy in force, because the offer might not be on the table if his health gets worse, right? So this is going to be the best product for him right now. So we might as well get it in force. His health could stay the same, right? I think that's kind of a stretch to say. As we age, that's probably not likely that it stays the same. But hypothetically, let's say that their health does stay the same. Then we're in the same position that we were, right? We're just kicked the can 2, 3 years down the road, and we're still in the same situation where we're dealing with this illness that we're probably not going to get coverage from a traditional domestic carrier. And so we're just kicking the issue down the road. And what I do know is that insurance gets more expensive as you age. So let's get the premiums locked in. If at this lower rate, even if your health stays the same, this is going to be the best coverage. And then the client can get better and great, right? Depending on the scenario, this is a possible outcome. We don't know if it's going to happen, but if it does, they do get better. And at some point, the domestic carrier changes their underwriting guidelines, and they can get I don't want to say a better policy, but a more of a traditional policy instead of a graded policy, then great. Like we don't know if that's going to happen. So again, let's get that coverage in force now, because we do not know what their health is going to do. So let's get the best plan in place with what we know today, because this offer might not be on the table 2 years, 3 years, 4 years down the road, especially if their health gets worse. So that's how I answer the question, why now, for the client. Now, why your industry solution? And this is, one that, a lot of salespeople struggle with, right? And kind of wrapping their minds about what options there are from an industry standpoint. Um, Again, I'm focusing on the impaired risk scenario here. So, I'm focusing on they were already declined or they know they're going to be declined, with a more traditional carrier. So, there, I think, from an industry standpoint, there's three different things that you could do here. You could self-insure. You could go with a Lloyd's option. Remember that, our sister company, IDU, does offer the Lloyd's product, so we could go that route. Or they could do a graded policy like a Flex DI plan. And, self-insure, I showed that screen earlier where, assuming a 4% increase annually, $10 million was going to flow through that bank account. So how much are you self-insuring right now, right? Are you even self-insuring 10% of it? Which means you have $1 million in the bank? Probably not. Maybe he does. I don't know. It's just a study. But sure doesn't have 10 million in the bank, or unless he has a whole bunch of money or something. So self-insuring, we wouldn't be in the business if we, recommended to our clients to self-insure. It's just not realistic. We know that, clients don't save. The money they do save, they're planning on using for retirement, or, paying for weddings or whatever the case might be. They're not, planning on self-insuring against a disability. So that one is off the table. A Lloyd's impaired product, again, we also sell IDU. So we sell these plans through our company as well. In some situations, a Lloyd's option makes sense. Okay. I always say if you're working because you want to, not because you have to, then Lloyd's is all right, because if your health worsens and you can't requalify 3-5 years down the road, as long as you're financially stable, it's not that much. But if you're young, like this individual that's 37 and still has, whatever, 20, 30 years working ahead of them, right? And having to requalify for a policy every 3 to 5 years, that's a lot of times you have to requalify. Right. And so that's why I'm not a huge fan of, so I'm a huge fan of Lloyd's. We do a lot of excess and GSI and all of that. But in the improved market, I'm hesitant a lot of times just because what if your health gets worse and requalify? We do it, but I think that the best solution if you have impaired risk, especially if you're 37 and make a decent income, is going to be a graded policy like Flex DI. And the reason for that, you only have to be underwritten once, right? It's guaranteed renewable to age 67. So you get underwritten, you don't have to go through that process down the road. In some instances, we actually cover the condition, the pre-existing condition, right? Real mild examples of, cancer, we can do that. If they're, mild situations of diabetes like this, some mild flu stuff, we do that as well. So think about that, right? They're declined with another carrier because of fill in the blank, and then you can come over and get this graded policy where it's actually covered. That's pretty huge. We don't do it all the time. It has to go through underwriting. It's usually single morbidity, but we do get them out the door. Also, longer benefit periods with this product, right? We can actually do a 10-year BP. So maybe he was originally sold to age 65. Unfortunately, due to his health condition, you can't get that, but we can get him all a 10-year benefit with an own occupation rider all the way out there, which is nice. Benefit resets, right? This isn't a one and done. You can actually go through your benefit. Let's say you have a 5-year benefit period, you go through that, you go back to work 6 consecutive months, right? With no issues. You're eligible for that 5-year benefit again. And then finally, mental nervous benefit. So having that built in, it's a limited benefit. It's not the full benefit, but the other options up there, they don't cover that. So that's kind of why I like the graded policy for the impaired risk, especially if you kind of fall into that, 30 to 50, 30 to 55 range. Well, you're or younger, obviously. From a pricing standpoint, I think it makes sense. And then just from the overall value that the graded policy has, I think makes sense as well. So that's kind of why your industry solution. So why you and your company? Now, there's a couple ways that you can take this. First of all, you always should be able to pitch why that client should work for you, right? I always tell people that I do what I say I'm going to do, and I'm always going to shoot you straight, and I'm going to, work my best to find a solution. It might not always be the solution that you're looking for, but I'm always going to try to find a solution, right? So why should anyone work with you? You should have 3 bullet points that you can rattle off that differentiates you from the other insurance professional down the road, right? Your company, now, that could be go one of two ways. That could be your actual insurance agency, and what value prop you bring to that. If you're looking for, why risk, why you're going to present this particular product, I can tell you, we've been underwriting impaired DI for over 30 years. This is what we have other stuff through the Lloyd's as well, but impaired risk is what we do, and so it's not like, yeah, we offer it, but it's got to be a good example. I mean, our underwriters, and I beat them up twice a week, and say, hey, how can we get offers out the no door? And so they're looking for ways to make an offer, not to get a decline, which is huge. And then also, Risk does a pretty good job of paying claims when they're supposed to as well. And so if you want to use, Y risk and flex DI, which I think we'll talk about on the next slide, you can use that, but you need to make sure that you're not talking too much about the company, and obviously not too much about yourself. Always in a sales presentation, you want to talk more about the client, but it never hurts, that they know why they should work with you. So make sure you have 1, 2, 3 bullet points that reinforces the value that you bring to the table that you're not going to get if they go down the street. Why our product? I kind of hit on the major points with the, why our industry solutions over the other two. I don't want to spend a whole lot of time on the product. When you're talking with the client, like the things that you need to make sure they know is, one, what are they going to receive? Right. And so what is the, monthly benefit that they're eligible for? You can see we go all the way up to 25,000. That's pretty big, especially since these are impaired risk, but you do need to communicate that to them. You need to communicate to them, what has to happen, right? That's going to be the definition of disability. And so depending on, if you add the own OC extension, there's actually 2 years built into the base policy. If you want to extend it, all the way out to 10 years, you can as well. But what has to happen, that's the definition of disability on the plan. How long they have to wait, elimination period, right? You need to let them know that. And then how long will they receive the benefit? You can see we have a lot of benefit periods up there they can select from. But those are going to be the big things that you need to communicate to them. Also important to make sure they realize that since they have a health issue, right, this is going to be graded the first 2 years. And so if they're disabled year one, they're only going to receive 40% of their benefit, right? So if they have a 10K a month benefit, they'd only receive 4,000. After the first year, that goes to 75, and then year 3 and beyond, it's 100%. And so make sure they understand how that works. Accidents actually 100% day one. It's just that sickness that is graded the first two. Otherwise, a couple other features, presumptive DI definition built into the policy, also a partial on it as well. We don't have residual since it, is a impaired risk policy, but it does have a partial benefit, if they're totally disabled, up to 50%, which is nice. So again, I don't want to spend a lot of time on the product, but you do need to know about the product to make sure that you kind of communicate those key points that I just went through. Product availability for the Flex DI, you can see it there up on the screen as well. In the states where it's not red, we still do have our legacy impaired risk products available as well. So we have a solution in all 50 states. this is the product I just talked about the previous slide, Flex DI, it's only available in the ones that are red or maroon there. So final one, why spend the money? I always say this is like addressing the elephant in the room with impaired risk DI. Is impaired risk disability policy going to be more expensive than a traditional DI plan? The answer to that is yes. Right? Like, it is. We're taking on risks that other people won't. So obviously it makes sense. I always tell this story of my stepson's stepdaughter, actually. So I don't know exactly what that would make her to me, but she was here for Thanksgiving, and she was looking for auto insurance. She had two accidents in the past year. Um, in her words, not mine, she ran into a mountain, not sure what that means, and then she also hit a deer, right? Now she claims that neither of them were her fault, right? But that's not the way that insurance gets. When I pulled up the quote online, all the adults in the room just groaned, like, "Oh my gosh, that's so much for experience." But based on her past driving history, she is a higher risk, right, than all the other adults that were standing in that room that haven't had any speeding tickets or accidents recently, right? I've been in that position back when I was that age, but and so you kind of need to set that expectation with them a little bit, but it's still affordable. I mean, this particular plan that we quoted here is still under 3% of the income of the client, right? And so, kind of the rule of thumb in the DI industry has always been 1 to 3%, right? And some of, the non-can to age, 67 plans with all the bells and whistles, they get pretty, in terms of percentage of their income can get up, but reinforce, what their monthly benefit is to their potential payout, right? I mean, 436 for a month for 1.2 million. That seems like a pretty good deal to me, especially when you're on insulin, dealing with the pumps, and the potential for becoming disabled, not only for that for Joe, but for any possible thing. You need to break it down for them. And the other thing that I tell people is that if it still is too expensive, you can modify the quote, right? You can look at how much money they have in savings. Maybe we do a 180-day elimination period, or maybe instead of doing a 10-year benefit, maybe we only do a 5, right? So we have levers that we can pull there, or lower the monthly benefit as well, right? Instead of doing 10,000, maybe we only say how much, what's the mortgage, car payments. Maybe you get that down to 7 or 8, right? And they're not going to live obviously as quite the lifestyle, but it's not going to be impacted quite as much. So you always say there are levers that you can pull if they still think it's more expensive. The other thing you can do, which might be something that a lot of agents haven't thought about, is help them find the money, right? And I know that nobody wants to sit down and do a budget, but usually if you sit down, especially if with an income like this, you probably can find $200 that can save them. I always tell people a couple places to look. Look at your auto insurance, right? Can you reshop that, or can you pay that annually and get that discount? That's a big one. My wife, she likes to drink Coca-Cola, right? And she will get a bottle of Coca-Cola, and she will probably only drink about half of it, but she'll just walk around all day with that, right? Well, she's a nurse, and she'd buy one of those at the vending machine there, and that's $3, right? And it's not like we can't afford a $3 Coke, but I'm like, hey, let's go to the grocery store. We're going to buy these. I know you're going to drink one a day anyways. We're going to buy them. You can take them, put them in there, and and so and that's not a big saving. That's only $2 a day, but $2 a day is $10 a week. That's $50 a month, 50 dollars a month. So you can see there's easy ways to help the client find money if they don't want to alternate the quote. So those are your two options. I still think it's too expensive, but just reinforce, man, that what the potential loss is, and it might make sense, spending 2% of your income to protect 1.2 million of the money that's going to come through your paycheck if you were disabled. So just a couple things to think through there. So here's the quote where I pulled that up if, in case you were interested. As I mentioned, 37-year-old, he actually fell into our 5A OC class. We did 10K a month, 10-year benefit, 90-day elimination period. You can kind of see what it costs there. So I always like to show where I pulled the numbers for Joe, who was the subject of our case study throughout today's presentation. So to recap, remember, according to the book, The Science of Selling, a consumer cannot make a purchasing decision or buy until all these questions have been answered in their minds. Now, however you get, those answers, whether they come to the meeting with them, whether you ask them questions to solicit the answers, or if you include them in your presentation, just remember that you need to address these 6 things in order to move that impaired risk disability cell down the road. With that, if you have any clients that have been declined recently or that have just been sitting on your desk because you're like, there's no way they're going to get through, I'd love the opportunity to take a look at them and see if we can quote them. You can send all quote requests to quotes@non-standard DEI. We do run the quotes just because we got to make sure that it's in the right classification and these are impaired risk cases, but basic information to get that quote. And we'll get that out to you the same day, unless it comes in after hours, and it'll be first thing in the morning. My contact information up on the screen there. Feel free to reach out with any questions. I'll get the list of attendees and fire you over this presentation so that you can have the questions and go back through and as I mentioned, you can use these 6 whys on anything, right? You can use these 6 whys as a framework just for your standard disability cell. You can use them for a life insurance cell. Like I said, if you're trying to get kids to eat vegetables at the dinner table, you can use it for that as well. I used to joke that I talked my wife into going on vacation up in the Black Hills of South Dakota when it was 16 degrees back in January. She wanted to go to the beach. I wanted to go up to the Black Hills. And so I said, I must be doing something right with these 6 questions because I convinced her. No, I don't think that's going to probably happen again. I think next time we'll probably go in something warm. But I conclude this presentation. Hopefully you guys found it beneficial. Again, I appreciate everything. If you have somebody that's been declined recently, we'd love to take a look at them. Otherwise, if you have any questions, don't hesitate to reach out. Appreciate all of you and talk to you soon. Thanks.